Hey folks, Dan Fair here, the rate update. I'm doing this special alert video because we're having a rally in the stock market. There seems to be thank God, a cure or a vaccine for the coronavirus. And I keep telling everybody, I'm like, we're going to see a reversal in mortgage rates as soon as we start getting good news. So let me show you what's going on. The Dow is up 1,100. I think it was up maybe 1,400 earlier, but this is nuts. And thank goodness I'm not complaining. But let me get to where I keep saying, we're going to have a pullback in rates or a jump in rates if we hear any good news. Again, good news in the world, in the economy, and everything is great for stocks. It's terrible for bonds, especially mortgage rates. So here's what's going on right now with the MBS market. We're getting clobbered, and I think we're seeing a little bit of an overcorrection right here. The reason being is we were up here, and remember I said, watch my videos. We're going to be back down here here shortly. We're going to get a really quick correction. So my thought was we get right back in line to right here, and I'll explain you these levels in 1 second. But we're getting an overcorrection. Is this going to ease back? I think. But again, the good news we have in the markets is bad news for mortgage rates. So let me kind of explain something that I go over on every once in a while, just to explain how all of this works. There's basically two investment tools you can do. I'm just making this in its most generic form. You have stocks and bonds. Okay, those are the investment tools you have in our economy. So your wealth advisor or you, when you invest, you're picking one or both, or you have a blend of whatever. But when the economy's doing fantastic, all companies are doing robust, there's full employment, people are spending money like crazy, nobody buys bonds because you're going to get a 1%, 2% return. They go into the stock market and they're going to get 20, 30, 40% returns in a fantastic market. Normally, you're going to get 6, 8, 10% in here. On bonds, it's basically stability. You want a specific rate of return. It's you're going to get it. Nothing's going to happen. As you get older, people are like, I don't really want to gamble with the stock market. Because a lot of older people think it's a gamble. And I get it now that I've gone through a couple crashes. But bonds are there when you actually, as you get older, you move more over, or if the economy is doing bad, you just want a specific rate of return that beats your checking account. Okay? If this vaccine comes out, you're going to see, and I'm almost positive you're going to see a V recovery. We've recovered a ton of jobs. Companies are opening back up. When we open back up between Corona 1 and Corona 2, and Corona 2 is going to even get worse now the flu season's coming. But if we get this vaccine, we won't be talking about coronavirus anymore in 3, 4, 6 months. So you're going to see companies opening back up. People are just finally like, oh my God, I can get out of the house, and they're going to go gangbusters. Watch this video 6 months from now, and most of what I'm predicting, you can go back to my videos. I'm hitting it on the button. I wish some of this stuff I wasn't, but I am. So let's get back to the charts. Well, basically, again, we're hearing the good news with vaccine. The presidential election's somewhat settled. I don't want to go there, but a lot of uncertainties out of that piece. But the biggest thing is the coronavirus. The Fed's pumping in money, there's government stimulus and all this other stuff because of the pandemic. If we didn't have the pandemic, we'd have higher rates right now. The economy would be going good, everything else. But because of the pandemic, it created all this mess. Now, if we get a cure and things start to open back up, you're going to see a recovery, I'm saying pretty darn quick. So because of that, today we have people just jumping into the stock market. Again, it's over 1,000 points up, and they're bailing on mortgage-backed securities. Well, the good news here, the Fed's not going to really allow mortgage rates to skyrocket because this is one big piece of the economy. So if you look at my numbers, I'm going to break down this chart for you. These red lines are what we call Fibonacci levels. These are ceilings and floors, okay? Right now, these are ceilings because the floor is way down here. Hope you can see this in this video. After I zoom, you might not be able to. All right. But then we have specific levels that we follow on a daily basis. And they're the 100-day moving average, 50-day moving average, and 25-day moving average. We normally, the 50-day and the 25-day have condensed because the Fed has stepped in and they're basically just buying up the market to stabilize mortgage-backed securities or mortgage rates. So you have you have them condensing right here. So that's technically where I'm thinking we should be falling into because the Fed's doing a fantastic job with this. The individual investor now is jumping in and they're selling, dropping this down. But when the Fed comes in, they'll stabilize the markets. So I think we're at a little bit of an overcorrection right here. You can see we are all the way down here. Let me give you an idea what this is doing or why we're following this or what my alert is. This number right here is what's happening to the price of a mortgage-backed security bond. As the price goes down, which it is here, and which it is here dramatically, rates are going up. This is a huge move. This isn't normal. If you go back and you take this, it goes from, let's say, 103 to 103.4. Look over here. I mean, it's taking weeks normally to make this move. We did it so far this morning, and it's only 10 o'clock Central Standard Time. Huge move. Everybody right now is electing to lock, all the analysts that I'm following. I say if you haven't locked in yet, don't do it because I got a feeling we're going to come back up to these levels where this is normalcy right here. We got a lot of panicking right now and a lot of probably computerized trading that's taking effect, just selling. So that's what's going on right now. So that my alert right now is if you're locked in, hopefully with most of our clients, we locked you in last week, and I came back and said I missed this little rally. We didn't really change rates, and rates came right back down and higher than where we were when I locked all my clients right in this range here. So we hit that one dead nuts on. So that's it. I will be posting later today what's happened by the rest of the day, but we can use this as a trigger. But this is my alert for the morning. Take care. I'll see you around 4 o'clock.